if you're just getting into real estate investing, you've probably heard of the term cap rate. Now, it might sound pretty technical, but it's actually one of the easiest ways to tell if a rental property is a good deal or not. So in this video, I'll break it down in plain English. But first, if you want to learn more about real estate investing, feel free to hit that like button, subscribe, and if you want help getting into Toronto multiplex investing, feel free to book a call with us. In simple terms, cap rate tells you how much income your property is making compared to what it's worth before you factor in mortgage costs. So basically, it is a quick way to compare properties apple to apple. And here's how you calculate it. Cap rate equals your net rental income divided by your property value. And let's go through this with a real example. Let's say you buy a rental-ready multiplex in Toronto for $1.1 million. After you pay for operating expenses like your property tax, insurance, and maintenance, but before paying for your mortgage, you're making $55,000 a year from rent. That would give you a 5% cap rate, which is a quick way to see what kind of return you're getting from just rents. Now, let's say you go the renovation route instead and you buy a property for cheaper, $800,000, and you spend $150,000 to turn it into a similar multiplex that brings in the same amount of rent. Your total cost here is $950,000, and that means it gives you a higher cap rate of 5.8%, which means that you're actually generating more income for every dollar you spend. This is where renovations can pay off. But that's not all. Because the market cap rate is 5%, when you back calculate the value of your property, it's actually worth $1.1 million, just like the turnkey one. And that means you just added $150,000 in value through renovations. And this is what we call value add appreciation. So if you hold it without refinancing, you would get better cash flow. If you do refinance at the value of $1.1 million, you can pull out some of that extra value that you built, but your cash flow does come down. But here's a warning. If you buy the same fixer-upper for $950,000 and you still spend $150,000 to fix it up, now your total cost is $1.1 million. You put in all of that extra work and you make nothing extra. And that is not a smart move. And that's why the numbers really do matter. Cap rates do help us see if a deal is really worth it. So what is a good cap rate? Well, it does depend on the market. Right now in Toronto, condos are at around 3%, which usually means you are cash flowing negative at today's interest rates at around 4%. Multiplexes are hitting around a 5% cap rate these days, which means that you would be cash flowing positive even after you pay for your mortgage. Now, we are looking for a minimum of a 5% cap rate, and if you are handy or you're open to renovations, then you might end up getting 5.5% cap rate or more, and that is how we spot a good deal. Now, here's something important. Cap rates usually change when interest rates change. So when borrowing costs go up, cap rates usually go up too, and vice versa, but it doesn't happen right away. There are times when rates drop, but cap rates don't come down because prices haven't adjusted up yet. And that is the window smart investors use to buy. And that's actually what is happening right now. Interest rates have come down quite a bit, but cap rates haven't really adjusted yet. And so that gap between the cap rate and the interest rate has actually widened more than usual. And because we are still in a buyer's market, sellers are more flexible, and so you might end up getting deals with even higher cap rates. And that is mainly because more investors are sitting on the sidelines than normal, holding out for a better cash flow or stronger appreciation. But the truth is, some of that is just wishful thinking. Cash flow today is already way better than what we have seen pre or post pandemic. And from a rental income standpoint, Toronto multiplexes actually make solid sense right now, even when we don't factor in appreciation. Now, if you are waiting for a crazy appreciation like what we had before 2022, 7 to 8% annual price growth a year, that's probably not coming back anytime soon. But here's the thing. Toronto property prices have already fallen 15 to 20% from the peak, and they've been holding steady for a few years now. And that tells us that we're probably likely closer to the bottom than the top. And when the market does start moving again, it can move fast. So what this means is buying today can actually give you that edge and better short-term appreciation potential once things start to stabilize. Yes, you can find higher cap rates in other markets in Canada, but those markets don't have Toronto's fundamentals. This is Canada's biggest city here in Toronto with the strongest job markets, the most people, and no more new land to build on when it comes to houses. And so this does give Toronto the edge when it comes to long-term appreciation potential. So if you are new to investing, remember this. Don't let what others think or news headlines throw you off. Stick to the facts, strong rents, and solid fundamentals. That is how you find smart deals and build long-term wins. And if you want help finding these opportunities in Toronto, that's exactly what we do here at Elevate Realty. So let's chat. We specialize in helping investors make confident, informed choices when it comes to multiplex properties in Toronto. We focus on real data, not guesswork, so that you can be sure you're making the right move. Whether you're looking for a fully renovated turnkey multiplex or one that can be converted into multiplex, we'll guide you through every step of the process. Here's what it's like to work with our team. We'll take the time to understand your goals, crunch the numbers to find the best investment opportunities for you, and eventually help you land the right property. If you do want to dive into renovations, we can connect you to trusted contractors and guide you through the process. Once the work is done, we can even handle leasing and property management too. Are you ready to get started? Just head over to this link here and let's chat.